I think there's a saying I heard one time is you're never as good as what you think you are. You're also never as bad as what you think you are. And so that goes back to, I just give advice, just keep going.
From cornfields to high-rises, office to industrial, houses to hotels, and every other asset class in real estate, we cover the people, the projects, and the profit. Welcome to the Investing in Iowa show. This show is for go-doers, action takers, and business owners. It's for people like you who are sick of Uncle Sam taking a huge bite of your apple. If you're looking to get ahead of what's taking place in Iowa, learn who is doing what, and how you can get in on the action, you're in the right place. Hosted by Neil Timmins, an Iowa native who has been involved in over $300 million in real estate right here in Iowa. Recording in studio from West Des Moines. Here's your host, Neil Timmins.
I've got Jared Husmann here on the show. Jared, what?
Oh, good to be here. Nice to be part of the Investing Iowa show. It's been a laundry list of, like we talked about earlier beforehand, we were talking about how many big names you've had on the show here. So it's just nice to be here, Neil.
We're stacking one more to the list today. Say, for the audience's sake, who are you? Where are you from? What do you do?
Who am I? What am I? Okay, well, I'll always do my 30-second elevator pitch. Makes it a lot faster, easier. Jared Husmann, I'm president of the Catalyst team, brokerage team, part of KB Commercial Realty. My team and I specialize in investment real estate sales across the state. But I'm a third-generation real estate entrepreneur. My grandpa was a home builder, carpenter in Anamosa, Iowa, and also on investment property. My dad was an electrician, had his own small business, and then turned into a developer. He started developing this store back in the day. It was small, called Dollar General. You might have heard of him. He was working with them back 20 years ago. And so I grew up as a gopher on job sites and construction sites. And then my mom also on investment property as well. So I grew up around a lot of real estate, a lot of construction, a lot of development. In my DNA, yeah. I always say, people ask me why I got into real estate. I said, why does a fish swim? I mean, it's just I grew up around it. I didn't realize it. I know it's referenced before, but I read Rich Dad Poor Dad when I was 16, and my mind just blew open. I was like, I got to do real estate, and bought my first house as an investor at 18, and that was 16 years ago now, and been doing it ever since.
Where are you from originally?
So originally from Anamosa, Iowa, over there by Cedar Rapids. Actually, kind of tying back here, just kind of a fun story on legacy. My grandpa, unfortunately, passed away a couple years back. But what was fun about it was when he passed away, we figured out that he had built a third of the homes in the entire town. He had over 400 permits to his name, and there's only 1,200 homes in the whole building. So he had built a third of a town here. So it's really kind of cool, the legacy you can see with real estate. It was really cool to see just the legacy we can give where we don't even realize it all the time.
At 18, bought your first house. Where was that?
First house. Oh, I actually looked the other day. Fairview Street, Oxford Junction, Iowa. Oxford Junction, Iowa was a town of 800 people. I saved money from my high school party, I guess is what it was. Graduation party. Thank you. Yes, graduation party. Saved money from that and bought it. It was a $12,000 house with a $4,000 rate of $16,000, and it rented for $300 a month. That was my very first property. And as I always say, I think you'll agree with this a lot, Neil. My favorite deal ever is my first deal, which is that one, and my next one. Yeah. People ask, what's your favorite deal? Next one. So is the next one or the first one.
Yep, that's exactly coming up.
Yeah, I got that one, and then came to Des Moines. And then bought a duplex and a sixplex after that. Both of them were on contract because I was only 18 years old. And we both remember this. This was 2009 when banks were not lending, much less to an 18, 19-year-old kid with no income, no job, no assets. Yeah. I was trying to do ninja loans after all ninja loans had collapsed. So I ended up doing 2 projects there through owner financing. And then my fourth deal, I should say, I found a private investor to back me. And from there, we started just flipping homes and investing homes. And we went from right around 4 properties up to, I think we're up to 60 or 70 in a 3 or 4 year period.
What brought you to Des Moines?
Good question. I went to this school called AIB College of Business. They gave me a full ride scholarship. So my goal was to get out of college as soon as possible. And they had a 3-year degree. And so I went all year round and got out as soon as possible. And I always joke, I've got a business degree from school that went out of business. So trust me, I know what I'm talking about. I can give you great advice on how to go out of business. But no, it was a great school. It was really great for me because it got me from a small town to a bigger city. And what was great about it was by my second year, I was already splitting time, half online, half in person. By my third year, I was all online. So at that point, I was 22 years old. But at that point, I was already running 3 or 4 flips. I think I had 5 or 6 rental properties, managing myself. I was running crazy. So I was doing school, Monday and Tuesday online, and then Wednesday to Sunday was basically working the business. So at that point, I was really just focused guns heavy on doing real estate.
Flipping and keeping anything at that time?
Yeah. So we were doing, me and my twin brother eventually joined me. I had a twin brother that joined me. He did a traditional college, so he was a year behind me before he joined me on business. We did a mixture of everything. We wholesaled. We did BRRRRs, buy, rent, rehab, fix up. We did straight fix and flips, straight just buy and rent. Some were just ready to go rental. You remember back then it was easy. I mean, you could buy houses for $40,000 that rented for $600 a month. They were turnkey. It was just, you drive down the street. I know we're showing our age here, but drive down the street and you have 6 homes for sale and you just pick one.
Square feet for like $1.50.
Wow.
Maybe 140, somewhere in that range. Brand's making new. And you're like, wow.
You know what? That's one thing though, I will say, a lesson to be learned here. This is something I've learned in the retrospect here. Looking back on it, one of the mistakes I made was fixing and flipping back then. And here's why I think that was a mistake back then is because one, I didn't know what market cycle I was in. We were on the way up and I was trying to sell houses on the way up, and I was selling on contract and I was even selling flip houses and I lost so much equity by selling and just fixing. I should have just fixed them and held them for one. Two, I was doing a strategy where you just said, I nailed on the head. Actually, I was trying to fix a house up, buy a house for $40,000, fix it up, put 30 into it, 70, sell it for 120, competing against a brand new build for 150.
Sure.
And at that point in time, flip homes were competing with new build construction. Today, that's not the case. Today, you can't even find a new build construction for less than $400,000. Right. So today's the day to be flipping because flipping works now. Back then, I was actually running a business practice that was probably not right for the time. And I didn't realize it. I don't realize it now. I realize it now, but I should have been buying and holding everything.
Yeah. In today's environment, buying and holding almost never makes sense.
Yeah.
Right? It's a rare property that one is able to do that and leave a reasonable amount of money into that deal.
Because your cash flow is gone, right?
Your cash flow is just wiped out unless you leave a substantial amount of cash into that deal.
Right.
Which most investors I know are going to go, I can't justify that return on the investment of my cash that's tied up in equity.
Well, I think what it comes down to is, this is something I've learned. Again, there's so many lessons I've learned, but one that I've really come back to a lot is Robert Kiyosaki's Cashflow Quadrant, the ES and the BI, right? And if you're a wholesaler out there, if you're an agent, if you're a flipper, if you're even a lender per se, you got to realize that what you're running is a business. Your job is to run a business, not an investment. An investment is something that's going to be a long-term. Investment is Warren Buffett. Investment is long-term. So I'm not against buying a house now and using it for the long term, but you have to realize that you're buying that as an investment, and it's not going to make money for the first 7 to 10 years. And you can only do that investment if you're making money as a self-employed person, as an employee, or as a business owner who can afford that. You're not going to probably make much cash flow. It's a long-term gain. So
break down that ESBI, go a little deeper in that for the audience's sake. If they don't know what that quadrant is. I'll add some color as we go.
Yeah, 100%. So if anybody hasn't read these 2 books by Robert Kiyosaki, he's got plenty, but Rich Dad, Poor Dad, and then Cashflow Quadrant. Cashflow Quadrant, essentially what Robert Kiyosaki says is there's 4 ways to make money. You either sell your time as an employee and work for it. You sell your time as a self-employed person, as me as an agent, or you essentially make money work for you. And making money work for you is on the right side. That's the business owner or the investor. And a business owner is someone who has people working for him or her to help them make more money, but they're running a business model. Business models are great because they tend to make a higher level of return. These are the 20, 40, 50, 60% return on investment. These are the ones that get big, the Amazons, the Elon Musk of the world. Day trading could be considered a business to an extent. Lending loans is a business. Flipping homes is a business. Those are all businesses. An investment is something that just literally kicks out passive income. Mailbox money. That's how I describe it as well. And so one thing, again, I've learned too is you have to really understand what you're trying to do. And investments at the passive income, and I think people have glorified passive income and it's great, but most people actually really want to get active income in a business or active income from self-employed. That's where you tend to get most of your money made, I found. But I think also those models will depend a little bit on what environment you're in for the market cycle.
No doubt. Kiyosaki outlines in his book, the goal is to get to that right side. Really, the goal is to get to the I column.
Exactly.
The I just to be an investor only. But the goal is to work your way through those columns, through those quadrant to get to the right side because it has the best tax advantages.
Exactly. That's a great way to put it.
Tax the lowest is that investor only.
Yep. Well, that's the same point too. That's a great point. What I forgot to mention is that yes, it's about passive income. It's about taxes as well. There's so many ways, and the goal is again get to the right. And everybody at some point wants to be the investor. Sure. And what's interesting too, I found as well, I think this is for all of us listening out here, even you, is that we also have to define what our goals are, because I think I have clients that are investors who make only $100,000 a year passively, and they're totally happy. I have other clients who want to make $10 million a year passively. Changes the goals up quite a bit here as well. But either way, the goal is to get to the right side. And again, looking back on it, one mistake I made, still make to this day probably, is utilizing the wrong form of income generation in the wrong market cycle. And I think if you're self-employed or you're a business owner, I think those probably work on almost any market cycle, depending on what you're doing. But being an investor, you need to be really careful of trying to invest, especially when market's hitting highs, like it has been.
Let's talk a little about market cycles. Hindsight's 2020 was very clear back in that 2008 to 12 era.
Yeah.
What cycle one was in. And obviously, looking back, those who knew what cycle we were in did extraordinarily well. Yeah. Right? That the hedge funds came out to play.
Oh yeah.
It didn't exist until the market cycle changed.
And they created they created industry. That's something that people again forget, is that what's so interesting as we look to real estate is, especially real estate investing, let's just say, is how new some of these industries are. Multifamily was not a commercial real estate asset until the early 2000s. Investing in houses on a large scale, build to rents, was not even done until Blackstone was one of the first ones to do it in 08 or 09. We remember this. Didn't happen so much in Iowa, but they'd go out and they'd buy whole neighborhoods of foreclosed homes. And so some of these industries are really brand new that we forget about a lot. And to your point, when market cycles came, I mean, the people who knew what was going on, they came out to play, and they came out to play hard. Yeah. And one thing I want to make sure, I guess, I'll say this as well. No one ever really knows where we're going, but history does repeat itself. And at the end of the day, we don't always know. We know we're going to have a recession at some point. We might already be in one for all we know what time this gets posted or what time we actually, hear about this. But all I can say is that whenever you think you probably don't have enough cash on hand, probably get a little more cash on hand. Because that's in 08, 09, you and I both remember it. We all wanted to buy more deals, but no bank would lend to us.
Yep, that's exactly right. All right. So given that, we fast forward to today, we worked through COVID, and today I keep hearing a range of opinions as to what cycle are we in. and maybe that means we're in a cycle that looks more like stagflation, just straight sideways stuff. But I'm curious as to your opinion as to what are we in today?
Yeah, I think as I always say, and I'm actually going to quote someone who's been on before, but I don't really know. I have my opinions. Yeah. But I know I've talked to Richard Hurd, who's been on your podcast before, and Richard Hurd one time told me, focus on the windshield, not the rearview mirror. And he said no one really knows. And if that guy doesn't know what's going on, to an extent, probably don't know either. I have my opinions based upon more of psychology of consumers and people than anything else. I don't really know. What I can say is it does feel like there's pain in the market. It feels like we're having that popcorn effect of some issues starting to kind of come out of just bad deals, bad investments done. Like, again, we remember this as both of us. It's not going to hit evenly. I mean, 08, 09, we bottomed out in Des Moines in 2011, and the market was hitting in 7, 8, 9 in the coast. And if you actually own property in parts of Ankeny, Waukee, West Des Moines, your value stayed the same in 11, 12. Correct. They actually went up. And so it really is not going to hit evenly. And that's where I think it comes back to one thing I can say, and we're going to kind of go forward a little bit here. One of the great things is know what you're good at. And if you're good at something, then you'll be able to see these signs faster of whether it's going to affect me or not affect me. And I was able to do so many things early on, agent, flipping homes, wholesaling homes, investing, apartments, all the things too, where I was able to figure out kind of what I like and what I kind of gravitate towards and what I know. And so what I can say is that I think specifically for some of the multifamily space, there's some challenging times coming up because I think some of those prices were overvalued. I think it's pretty clear office space is probably overvalued right now. But again, I know you've had Rupert's on. They might disagree with me. He says something differently, but they know because they're in that field more. And again, it's not going to hit evenly. It might be one of those things where the market cycle hits some people harder than others. And that goes back to that kind of earlier comment, I think, is that just get a little more cash heavy because whether you're feeling okay right now, I think you're going to have some problems coming forward in the future, or you're going to want cash on hand to go out and take advantage of some of these opportunities as they popcorn up and come through. I don't know if we're going to have a market meltdown, but it does feel like we are going to have some issues coming up just because of some bad principles that were done really in that 2020, 2022.
Hey, Iowa investors, this is Ava Boutkamp, Chief of Staff at Legacy Impact Investors. Have you thought about adding real estate to your portfolio but don't have the time or desire to play landlord? At Legacy Impact Investors, we do the heavy lifting. Our team finds the deals, manages the properties, and handles all the day-to-day operations. Our select group of qualified investors co-invest with us, gaining ownership equity without opening a tenant email or responding to a maintenance call. They just share in the income, appreciation, and tax benefits. These opportunities aren't for everyone. They are for qualified, accredited investors only. If you want to learn more, please visit legacyimpactinvestors.com to apply.
Range.
Let's talk about that relative to apartments. You said that that in that era, I suspect, referring back to that era, you saw some tremendously high prices in the apartment side, and somebody bought those deals. Probably locked in some killer debt at that time. Man, you would have had a choice. I mean, you may have had a Fannie Freddie loan, and you could have gone out and locked in some extremely long fixed rate debt. Everybody did. The debt is going to have to be refinanced, or you're going to have to make a decision. It's either refinanced or, the numbers don't look good. I got to bring a check to close to cover the coverage ratios. And so maybe it goes to market at that point in time. You may see some of these be reset. Is that what you're seeing? Is that what you were leading to? And
I think, and that's what I saw happening in 2000, specifically in the multifamily space, which my team and I tend to predominantly broker multifamily. We do all investment grade, we all commercial real estate, but we tend to favor multifamily because it's just been hot. What we saw, and I'm going to tie back to earlier question here, but what we saw in 2020 to 2022 was A-class apartments got valued similar to C-class. Everybody wanted that value add. So a lot of C-class investors were able to buy a 5 cap rate C-class because it had a value add pro forma of being a 7 or 8% cap rate.
Well, you can underwrite it. You put together, you may got a 5 cap, but you make it look great on the sheets, right? And Excel, all of a sudden it says 17 IRR with a 3-year hold.
Exactly. And what we're seeing too is it's interesting is that we're seeing all across the nation brand new A-class apartments selling at 5 caps. And again, I'm going to tie back in. Richard Hurd and I had this conversation one time, and they said, why wouldn't we buy a BC class asset right now? They said this a couple of years back. Again, how forward thinking that guy was without realizing it. But he was saying back then, he goes, there's no value in B and C. I can buy an A-class performing at 5 cap. Why would I buy the B and the C that's not performing like that? Right. And so I think that's why we've seen this misalignment of values in that B and C class market, specifically C class multifamily. Now, to answer your question, I think what's going to happen, and I'm going to tie back again really hopefully well, but I think it comes down to whether those properties get sold or not get sold. This comes back to who bought it. Was it a syndicator, investor, or a business owner? Again, or investor as well. I'm talking to some of these investors who bought these C-class properties who are just high net worth people, have made money elsewhere, and they're saying, you know what? We overpaid. We know it. We're in trouble. We're going to hold 10 more years. Yeah. We're fine.
Yeah. So overpaid being relative to 2 points in time.
Exactly. Mm-hmm. And so what I'm seeing is that these investors who bought C-class multifamily overpaid for it in their minds are going to say, you know what? We're going to wait it out. I think we're going to see more of the people that are forced to sell is what I would call the business owner who bought that on a value add, trying to perform it, trying to be a syndication, trying to get out in 3 to 5 years, 7 years as well. And I think they're going to at some point have their investors, won't be the syndicators themselves who admit it, it's going to be their investors, their preferred equity is going to come in and say, we're selling this, we're getting out. And I think, again, it comes back to what was the underlying principle? Was someone buying it as a business, trying to reposition the asset, or buying it as an investment?
Yeah, the syndicators oftentimes, and I'm in that category.
Yeah.
Depends on the business plan. And it depends on who your investors are.
Exactly.
Or do we have long-term, focused investors, or is this kind of like we're rolling the dice and trying to get in and out in a specific time frame?
Right.
I've always said with every deal we've ever done, if I would buy it solely myself without you here, I'd never bring it to you as an offering. Because I'm in this. We've got a plan, but it's going to make money sooner or later. But if the times change, you've got to know there's going to be an extension here.
Well,
time cures all ails. Pinks proved that to themselves true in 2008 era. They just buy their time.
I've always said this, and one of my friends, Caleb, Caleb Fritzler as well, say his name, kid in my house has said before, I said, there's no mistakes in real estate. Just give me a long enough runway. I could have bought something in 1929, but give me a long enough runway. I can make a C-130 take off, right? So you can make the biggest, fattest, ugliest deal take off with a long enough timeline. And that's even to your point. I 100% agree with you. So I have syndication deals I've done. I have partnerships. I have development side investments. One thing that I go into, just for anybody out there listening, is a lot of my investors and partners in my syndications are already experienced or established investors. They're already at the point where they've actually reached retirement age. They've made a lot of their money in real estate. And they said, hey, we're willing to invest with me because I'm younger, hustling, working hard. But they get the game of real estate. That's what's beautiful about this, I think, is that they know if things take longer or we need capital calls, they've been there before. I think some of these syndication groups, from my perspective, were over-promising, going out to doctors and attorneys and accountants, average people that aren't used to this game, who aren't used to capital calls, aren't used to things taking longer. And that investment group is going to decide a lot of things that are going to be different, I think, than what we're seeing there as well in our current market cycle as we're coming into.
Yeah.
So,
no doubt. You've brokered a lot of multifamily properties over the years here in Iowa. I'm curious, roughly, what percentage of those have been in-state buyers versus out?
Oh, that's a great question. I've done over $100 million of transactions. Me, myself, and I, not a team. This isn't me pulling from CBRE saying, me and my team have done over $1 billion. No, this is me physically touching every deal. I've actually I do my quarter reports. I believe you're on that quarter report. Every quarter, I break down every sale, 120 pieces of information of sale for each different sale. So I break down buyer, address, city, zip code, asking price, sale price, cap rate, rent. I mean, it's very detailed. In the last 8 years or so of tracking this, 66% of all of our buyers have come from out of state. 60%. And if we actually look at the numbers, I actually plugged it into AI and let AI do some analysis for me as well as fun. But of those buyers, we're seeing a predominant push from California, New York, and Colorado. And specifically right now, we're seeing a lot of money coming in from Colorado because of some of the policies they are implementing as well. California and New York have always been kind of the more progressive kind of things. But Colorado in the last year has really been even more progressive.
Why? What stands out from Colorado? I understand the coast a little more. Colorado.
Yeah, it's become, and politics just changed in Colorado. They were very...
There's no doubt about that.
Yeah, and they become very progressive in a detrimental way to landlords. So, for example, 2 things they've done, literally one just came out this week. They have said that if you are going to renovate a unit, you have to give your tenant 6 months notice and let them actually say no to renovate a unit to raise rents. If you sell an apartment complex, you have to give all the cities and nonprofits 6 months first right of refusal for them to buy it in case they want to make it so it's more and more affordable income, more affordable housing. They also just passed a law literally in the last week where you can no longer charge through for RUB systems. They're calling that essentially a fraudulent claim of rent.
For the audience, in case they don't know what RUBS is, describe that.
Oh, sorry. Yeah. So great question. So RUBS is a resident utility billback system. It's a way for owners to say, hey, look, we're on one water meter. Let's just say that pays for the entire building. We want you to help pay for your water, your sewer, your trash, that kind of thing. We're going to put together a math equation. You're going to pay your fair share of our operating expenses for the water, for the trash, and for other expenses like that as well. It wasn't done a lot even in Iowa until 5-6 years ago, but it's been common amongst many states. And it's a way for landlords to essentially pass through some of their variable costs, variable expenses, onto the tenant, so they're not always feeling the pinch and the squeeze.
The problem with the inability to put a RUB system in place, you think, all right, well, if water's is whatever, it's $50 a month on average, we'll just add it to the rent, which landlords will do, and they'll eliminate RUBs. The problem with that is that you have no control over the variable usage of the water.
Yep.
I mean, the tenant may just run the water nonstop.
Yep.
In older buildings where there are boilers, I mean, we've had it where the tenant literally has the heat on and the window open in the middle of winter.
Yep.
You're like
100%.
If you're paying for all of that, you tend to have different uses.
What I think about that is, and then we're going to I don't want to go to rabbit hole too much here, but I think with the difference with RUBs, and I think this is where Colorado, I think this is kind of what they're thinking of, is I think RUBs works great if you are doing A-class multifamily. I think the ability to put RUBs into a C-class multifamily, more affordable rate is really challenging because just by their very nature, the resident, the tenant profile are not good at budgeting. There's nothing against them. It's just that they're not used to doing a budget. And so they aren't able to budget for what that's going to cost. And so when you're doing RUBs on a C-class multifamily resident or tenant, they're not going to pay that, which means they're going to get angry, which means they're going to go to their congressmen and men and women and file against it as well. I think that's what's happened. across the country, and it's happening in Colorado. And again, that's pushing more and more of these buyers to our market as well. Also, per rumors right now, and I don't know if it's true or not yet, but per rumors, we're about to get a Canadian group coming in, buying up the largest sale in the history of Iowa apartments as well. So that might be our first time Iowa's attracted international interest from buyers here. But we're seeing a lot of money coming in from these, again, specifically 3 states. And they're seeing value here because we're seeing stability and we're seeing our population growth.
You've seen the Canadian dollar appreciate against the U.S. dollar as well. There may have been. Yeah, I'm sure the transaction was largely in the works long before that, given
it's still in the works. It's still in the works from what I know. So it would
given the dollars falling against a lot of world currencies.
That's true too. Yeah. That's something that, and that's the thing too, is like, that's what, this is just segueing here for a second. But one thing about real estate that I absolutely love, is you're never going to know everything. Like you just mentioned the dollar. I wasn't watching the Canadian dollar, but now you mentioned, now I'm going to look at the Canadian dollar versus the US dollar and see how that impacts decision-making, investments and theories and economics and stuff. And it's so interesting about real estate is that whenever you think you know something, you don't know it.
Just go to work tomorrow.
And I got to say, for anybody out there, if you ever want to really have fun, I don't know if you ever had experience yourself, but I believe your brother has, go to Las Vegas Recon. Real estate convention. It's ICSC, International Shopping Center Convention. If you want to think bigger, go to that. I mean, that's when you see billion-dollar developments pitched on escalators. And you go to there and you start realizing like how big this thing called real estate is and how much more you can learn. It's so interesting and fascinating that whenever we think that, you're smart enough, we are drops in the ocean compared to what some of these guys are talking about, thinking about at high levels.
If you're a house flipper, execute the burst strategy, or do double closings and are in need of money, Little Guy Loans is your go-to lender here in the Des Moines area. Time is money. Loan approvals in 24 hours. Closings in 5 days. Little Guy Loans was founded by Neil Timmins, an investor just like you. Since he has been in over 10,000 homes in Des Moines, there's never an appraisal. Houses, multifamily, and commercial property loans up to $1 million. Check out www.littleguyloans.com.
Taking back to the 2010, 12, 15 era,
sure.
You're flipping homes, and at some point you decided to get licensed to get into the business on the agent side. What attracted you there?
Great question. So this goes back to really, again, knowing the times. And again, some things I've learned. At one point, my brother and I realized flipping homes was not making much profit. At least back then it wasn't. It really wasn't as lucrative as we thought. And so we came up with this idea. There's a show on back then. It was called HGTV. It was called Property Brothers. Probably heard of it, seen it. And we thought, you know what? What a great way to actually make our profits guaranteed. Let's just become the Property Brothers of Des Moines. I'll be the agent. My brother will be the contractor. And we'll go find these homeowners to pay us to fix up homes for them. We'll buy the houses, we'll fix them up, and they'll just pay us a general contracting fee to flip the property, as opposed to actually trying to take all the risk of selling on the open market. Right. And so we become the Property Brothers. So I went and got licensed. I was going to be the agent, the better looking in the tie. And yes, I'm the better looking one for everybody out there. I don't care if anybody says that hammer is not that sexy. It's all the tie that gets it for ladies. Anyway, so we became the Property Brothers. And true story, I did 2 deals residentially. Absolutely hated the entire process. I remember the one deal we had to push back like 1 week on closing, and I felt like I was asking for a firstborn child's name or something. It was just like, it was pulling teeth. And coming from an investment background of 6 years prior of all these investing, I didn't care what color the walls were, or the paint, or the windows, or pushing closing back. It was just a deal for me. It was all numbers based. Right. You're the same way. And the emotions of residential real estate, I realized, were not where I wanted to be. And I knew I always wanted to go into commercial real estate anyway. That was always the goal, was residential to commercial. It was never to end residential. It was always to go to commercial. I always say, this is maybe my own personal opinion, but I've met a lot of millionaires in residential real estate. I've met a lot more deca millionaires in commercial real estate, or centimillionaires. You probably had a couple of them on here. And so I did 2 deals as a house, as a residential agent, hated the process. And I said, I'm going to commercial real estate and I'm not looking back. Yeah. And at that same time, we were able to actually get out of our portfolio. My brother and I were able to get rid of all of our houses, all of our portfolio. We gave it back to our partner investor. We worked out that deal, and we were able to go into some commercial real estate assets we've owned. So now I still own commercial real estate. Have not owned a house in over 12 years now, 10 years, like whatever it is. Anyway, I haven't owned a house for lot long, and I am very okay with that.
Your favorite commercial asset today, and why?
I personally like industrial real estate. This goes back to trying a little bit of everything and doing what you do best. The reason I like industrial, and this comes back to something I'd give any audience advice on, is kind of the Shakespeare, know thyself. The reason I like industrial is it fits my personality. It is blue collar with a hint of commercial. It is throw on the boots, throw on a polo and a pair of jeans, and you can pretty much be in industrial real estate. Most of the time you're renting to contractors, manufacturers, that kind of thing. And again, it's that hint of business with a lot more of just that straight, from my experience, contractor grade, kind of roughneck environment. And so I really enjoy that. I don't mind putting on a tie now and then, but I really enjoy industrial real estate. I found that I can do retail. I enjoy retail as well a little bit. Office space is not mine. Office space is too, what I would call LA for me. It's too tie and suit. It's too much of just, I don't know, it just doesn't fit my personality type. So personality type, I think I tend to gravitate towards industrial.
Houses, individuals, somebody's buying and caring about every nuance. And then that contractor's got to have certain things that got to fit in that box.
Yep.
It's just a different personality.
Yeah. And I think, and again, it comes down to is, and I think you could probably speak to this as well, Neil, is that like when you've done so many things, what's great about it is you also kind of learn what you gravitate towards and what you like. Sure. And like, I think you own retail a lot more, if I remember correctly.
We own just about everything.
What do you like the most, out of curiosity, having a conversation? What do you like the most and why?
Yeah, that's a good question. I don't know that I have a real good answer there, because I've liked a lot of it. The retail's been very good. We've got some in the portfolio today. We've cycled out of some, did extremely well. And we've got office, medical office, industrial.
We have medical office as well.
Mobile home park, self-storage. And so, we've done well in just about everything. I mean, if you're selective and just wait for the right pitch, you can do well in anything.
Yeah.
I mean, we've done well. The office we're sitting in, so it's only 10,000 square feet. There are 10 individual suites here. Everybody's got about 1,000 square feet, and you hear office doing terrible. This office has been fantastic. I'd buy more buildings like this to get the right price, because you're dealing with individuals, typically self-employed individuals, at 1,000 square feet. We've got people who have their own business, but they can't work from home. You got massage therapy, right? You've got accountants. We've got real estate closers here. We've got roofers here. They're not working from home. Well, so they need an office. They need a small office. They don't need 50,000 square feet downtown.
What's interesting about this too, this is my, I'm hearing the same thing as well, by the way. And I'm hearing that what I've learned about commercial real estate, and I could be wrong, but I think the real value of commercial real estate is always knowing how much can you chop it up. So we're sitting here about all these big office spaces that are totally vacant, but every time I talk to them, it says they own buildings, office space that's 1,000 to 3,000 square foot, totally full. Because they're able to chop it. So it's how the building's built, which also comes back to my background in construction, I think. But I think the value of commercial real estate is being able to see how much could I demise this and still make money. And I think what you're doing really well with, and I think this is kind of my say as well, is that knowing what your ideal client is. Your ideal client, you said a second ago, was like that individual business owner. You don't want to be renting to some big corporation. You don't want to be doing, Richard Hurd and I have had this discussion before. He actually hates a lot of his big box stuff when we last spoke, because there's no negotiation. They come in and Container Store is going to pay what they're going to pay. And they're not going to negotiate. They're not going to work with you. And so, he doesn't like that. But you found your ideal client as well, it sounds like.
Yeah. In this building, yes. And then there are other buildings. And we've got industrial properties, 15, 20,000 square feet. It's a different ideal client. And you know who you're targeting.
But you're targeting again, too. I think that's what it comes down to for anybody is, if you're going to build a business, typically a business, is know what your customer is.
Yes.
Know who's my customer I'm actually supposed to work with in a building business of lending money, of flipping homes, of building homes, of syndicating apartments, whatever it may be, but knowing what your ideal customer is.
What you're saying is know how you deliver value to the marketplace.
Yeah. Know your value proposition. And if you don't know your value proposition, I guarantee you can figure it out real quick. Go ask your client. Go knock on some doors.
Why do you do business with us?
Right?
They'll tell you.
Or and even not us. I mean, you could go door knock. You could go door knock any office building right now and say, "Hey, I'm doing an informal study. I just want to know why do you lease here? What do you like about leasing here?" Maybe it's not your, it might make the owner mad, so maybe don't say that very, very, very bluntly. But I mean, no. I mean, it's just knowing what people want and then giving it to them. And I think that's where you can really make some good money in a business by asking your customer what they want.
2025, what are you most excited about?
25. I'm excited about 2026.
Well, I said a few years ago. Survived till 25. Right. That was a theft of, of Sam Zell quote from a number of years ago.
Yeah. Oh, Sam Zell, may he rest in peace.
Yeah, correct. We lost a great one last year.
Oh God, he was a good one. I know my friend Brian actually, when Sam Zell passed away. If you know who Sam Zell is, read the book "Am I Being Too Subtle?" It's a great book, and again, original OG of investing. My friend Brian actually had a moment of silence in his CCIM group he was doing that passed away. But no, I mean, at the end of the day, what am I excited about? I would say I'm really excited about. I'm excited about anything, actually. I mean, when it comes to real estate, I'm always excited about something coming up. What I will say is I'm finding it very interesting. I really think that we're at an inflection point in the market. I think we've had a year and a half, 2 years of just things being at the top. No one knows what the heck's going on. We had an election. Rates have doubled overnight. And I feel like we're finally at the point where decisions are starting to get made. Whether it's in the office space, the retail space, industrial space, multifamily space, banking space, lending space. I feel like we're at a decision point where people are starting to say, what are we going to do? And some of the decisions are, we're going to kick it off to next year, from what I'm hearing. But I do feel like we're at points where we're starting to have to make decisions, and we're kind of getting off the benches. And so I'm excited about to see what these decisions make, because decisions are going to lead the market either up or down, forward or back, left or right. And I think those decisions are going to help all of us move forward. I mean, the one thing we hate as business owners is indecision.
Yeah.
We do not like indecision. Yeah. We do not like uncertainty. Yeah. And it feels like we're starting to kind of get some decision-making processes coming to fruition this year.
Love yeses can handle no's.
Yeah, exactly. So,
but a maybe.
I don't know. I mean, curiosity, again, let's flip the script a second. Yeah. What are you excited about this year? What are you hearing about or excited about?
Lenders are still lending. We've got a couple of things we put under contract here in the recent weeks, and so going to market, talking to multiple lenders, mm-hmm. there's an appetite to put the quality deals together. And so from that standpoint, which is great, because a year or 2 years ago, you'd take it out to 5 and the range would be enormous, 100 basis point spread, and then 1 in 5 guys, you'd be like, we don't have any money.
Yep.
So I'm not hearing that today when we're going out to market. To talking, and we're talking to more banks because I want a wider pulse, wider range of input from people. Mm-hmm. It's almost like data points in my mind to go, okay, this is interesting.
Yep.
What do they have an appetite for, and what's from a broader market standpoint, meaning banking, what's happening. So from that standpoint, it feels good. Feels like I agree with you. It seems to me like people are making some decisions. I've seen products go to market that have been more, in my opinion, more appropriately priced versus a year ago. Let's say people were heavily concerned about inflation. Therefore, they would take a deal where there is no spread over what they're borrowing at. In fact, in some cases, there was a negative leverage.
Negative leverage, yep.
I think that was largely fueled by inflation scare. In times of inflation, you want hard assets. To me, we're getting to a spot where we're getting into some positive leverage on things. To get some things done, and even things we're not transacting on, but I see in the broader market going, okay, there seem to be more appropriate prices taking place given to where the leverage, what one's borrowing at today.
Yeah, we're starting to see, I feel like, that reset in the marketplace. Again, one of my mentors told me that from 2025 to 2027, we're going to have a complete reset of the commercial real estate market, because everybody's debt's starting to come during that 5, 6, 7 year period here as well. So I definitely think we're starting to see that. What I will say is, for anybody out there listening to, and then things you're doing really well that I would tell anybody else to listen to as well, is one, realize that not all banks are created equal, especially commercial lending. And residential, they all lend the same. No doubt for the most part. They all do the same thing. Yeah, exactly. Exactly. They all sell their loans off. Commercial real estate, totally different story. So if you're doing any kind of commercial real estate, no bank is the same. They're all created differently. And then the one that I've learned from anybody some of my mentors have taught me this is what's that story is don't be the smartest person in the room, right? You want some people smarter than around you. Well, what I've actually heard another reframe of that is real wisdom is being able to take people's wisdom and extract from it, basically. Yeah. Don't just take everyone's word for it, but being able to take everybody's piece of advice. They talk about this actually at NASA, where you can create groupthink as well too much. So the real wisdom is being able to get opinions from everybody and then figure out how to draw from that. And I think that's the key too, is like you said, is don't just go out and talk to one bank, go talk to 100 banks and see what each bank is saying. And then from there, take your own opinion of the marketplace. Right. Don't ask one banker, don't ask 3, go ask 100. And then again, don't let them all tell you what they see, but take the knowledge from that. And I think the real successful people I've come across are able to always get multiple points of data from multiple people, and then from there, make the best decision forward for themselves, for their business as well. I think that's something I tell anybody out there is go get multiple points of data and then make your own best informed decision.
I like that too, to tie it back to specifically to real estate. Anybody who points to one comparable sale
Yeah.
as an example to go, well, that's what it sold for, the highest comp ever, right?
Right.
That's what, this is what we're going to base this on. Like that, that's not really how it works.
Well,
Appraisers, that's not how this whole thing.
Well, at the same point of that, I also will, and on other points, I hate it when someone says, oh, well, I watched the economists and they said the market's going to go in recession and tank. That's one person's, an economist is worse than a weatherman. I mean, they don't know anything per se. And so don't just take one person's opinion on something. Don't just use one comparable thing.
Yeah.
You want to be gathering from multiple data sources at all times here. And then again, the key is not just listing them, but actually asking the right questions. And the right questions, you'll figure out making a lot of wrong mistakes. By the way, if you figure out how to ask the right questions, it's because you ask a lot of the wrong questions. Like you said earlier, you guys are buying a lot of quality assets. The reason you know what quality is because you've done a lot of bad, probably quality deals and asked a lot of the wrong questions. But again, I think it's taking from a large range and being able to say, okay, what is the real story here? And I don't mind someone saying, let's use your example with the highest comparable. Okay, maybe that is the best example, but you better tell me you're going to be putting in granite, stainless steel, top tier, whatever it is, put in a Starlink system with internet. And okay, now we're talking about, we're going to hit the higher echelons here. But again, let's take data from all these points to create the best analysis, not just take one piece of data that fits our narrative, fits our echo chamber, of what we're doing here as well.
Ready for the final 3 questions?
Okay, go ahead, hit me.
If you had one piece of advice for your 20-year-old self, what would it be?
Keep going. I guess that's as simple as it is that if anybody out there is listening to this and I'm assuming you're at least in real estate, you're an entrepreneur, I guarantee it's going to be harder than you ever thought. And I think we're all going to go through those points. And every time I tell myself, just keep going. But at the end of the day, it gets better and it gets worse. And I think there's a saying I heard one time is you're never as good as what you think you are. You're also never as bad as what you think you are. And so that goes back to I just give advice, just keep going. You're not as good as you think you are. Just so you know, you're also not as bad as you think you are. So just keep going.
2 books that changed your life.
2 books that changed my life. Okay, that's an easy one there. The first one, Rich Dad, Poor Dad. I know it's referenced before. That was the book I read, and I joke that the sun opened up and the sky shone down, and God said, this is what you're meant to do in life, is do real estate, which is kind of cliche, but that's how I felt, at least. So Rich Dad, Poor Dad. And then the other book that I still read about once a year is The Traveler's Gift by Andy Andrews. It's a faith-based book, but one of my phenomenal books of a story of a man who gets to travel through time. And he visits different people who give him different gifts. And as a spoiler, I'll always give the first one out. He gets to visit Harry Truman and his first experience, who right as Harry Truman is about to announce the dropping of the atom bomb. And he gets to have a conversation with Harry Truman about making decisions. And Harry Truman says, the buck stops here. I'm making the ultimate decision. I'm dropping the bomb. It's my fault, no one else's. And it's just a story about a man going through time, meeting different people, and getting gifts from them of how he can better live his life. And so a great book I read about once a year still. Every 2 years, maybe.
If you were cast away on an island for a year, you can only get 3 pieces of data about your real estate business, not the brokerage side, but the real estate investment business. What 3 pieces of data do you need to know each and every month to know how your business is running?
Oh, good question. Here's what I want to know. If I only had 3 pieces of information, that's all I could have. I would want to know, first question is who's in charge? Who's running the portfolio? And that better be the same person or someone I trust. So who's in charge? The first thing I want to know, and who's making the decisions. Second thing I want to know is at all times, what's our profit and loss? What's our net income, our net for that month? And then what is our loan to value? I'm always going to base it on the 2 balance sheet and profit and loss. Balance sheet, profit and loss. So what is our loan to value? Are we in a healthy spot where we're not going to go under? What is our net profitability? And more importantly, beyond that is who's running the business. Because who is more important than how, right? Who, not how?
Yep. You got it. Dan Sullivan reference there.
Yep.
Joe, this has been a fantastic conversation. Say, I've asked lots of questions. What's one question I did not ask that I should have asked?
Should have asked. I mean, I guess, it's a good question here. I have to think about that more. Question you should have asked me, I guess, is, maybe what's my favorite color? Probably is a good one. And the answer, by the way, is blue. I do like blue a lot, but hell, green's good too. Green spends better as well. So
you got a blue shirt on. That was going to be my answer for it.
Blue, yeah, I guess it fits well with my eye color, I got told. But no, I will say, if there's one thing I would say if there's one piece of advice I can give anybody, it really is the advice I would say is keep going. And then back to the joke about favorite color and being blue or green. Is just so you know, you're never going to go broke making a profit. That's something that Caleb Pritzer told me again back in the day. And so don't be afraid to go make profit. And again, Richard Hurd, Shield, not rearview mirror. Focus on making profit and going ahead every day. Keep going forward. Keep going. So if I had to give advice or question should be asked, it would be, just don't forget that profit's a good thing. I know people make this big deal about all these companies. Sorry to say, hate them, love them, but Tesla. I mean, I think the PE ratio on that's like 0.1. I mean, you're going to make money in 1,000 years. Right. Guys, not everybody's Elon Musk. We got to make money today. Making money is not a bad thing. And so that's a piece of advice I guess I'll leave anybody.
For people that want to find you, follow you, connect with you, where can they go? What should they do?
A super great question. Honestly, you can pretty much just Google me and find me. Just Jared Husmann, JaredHusmann. I'm on the first 5 pages of Google. That's the thing. LinkedIn, same thing. Facebook, same thing. We do have a YouTube channel, a Catalyst team, where we do a lot of multifamily breakdown and stuff as well. But honestly, otherwise, just text me. I'll just give it 515-639-0455. Shoot me a text. Happy to talk, grab coffee, meet, whatever. And then I'm pretty open book. That's the beauty of us in Iowa here. We're all pretty open with our time. So just shoot me a text.
We'll drop the links below in the show notes, Jared. I appreciate your time.
Cool.
Thanks for listening. If you're enjoying the show, may I ask a favor of you? Naturally, subscribe so you never miss an episode. But would you rate and leave an honest written review on Apple Podcasts? It does a lot for us here at the show, and I appreciate reading your thoughts. Great guests make for a great show. If you know of another Iowan who would be a great guest, or you yourself have interest in being a guest, well, get on our radar. Visit Investing in Iowa to fill out an application or recommend a guest. And if you want to connect with me one-on-one, go to LegacyImpactInvestors.com. Click on the Invest With Us button in the top right corner, and there you can pick a time for the two of us to get on the calendar and connect. Until next time, keep investing in